Hi guys, welcome to my favorite time of the day and the week, Tuesdays, because I get to spend it with you. And I hope that everybody isn't going too crazy around this time of the year, because I know it gets pretty crazy. And it's pretty crazy in the markets too. So first I'm just going to do, and only because things are kind of going a bit crazy now, I'll do things on the spot markets just so you can see what I've been telling you. And we'll start with the spot gold chart. And what you're going to see is a series of higher and higher lows and lower highs, forming that wedge. Now you can also see that the spot price as of last night, it was sitting on there. And this morning I pulled those two little things up on spot gold and spot silver, and actually even spot copper from the show this morning. So it looks like we have had another breakout in spot gold. And remember how this works, right? It's kind of like you're pushing down on a spring, and when you release it, the spring shoots. Ooh, it worked that time. Awesome. So my expectation would be for us to see spot gold now continue its upward rally. But what I'd also like to point out is that in this wedge formation, what it's been doing is giving that 200-day, that red line, that 200-day moving average, a chance to catch up to the price, so that it's got a stronger foundation. So that's what's happening in spot gold. Let's look at spot silver as well, which now has officially broken above. I don't know where it's going to close today, but it has indeed broken above that $60 mark. You know, not a surprise. I mean, once you know how to read the technicals like this kind of stuff, truthfully, it doesn't matter what you're looking at. It all works the same. So while silver did give that 200-day moving average a chance to catch up, it is continuing to fly. Now, both spot gold and spot silver would have gone too far too fast, and so it's okay if there's a pullback and there's a consolidation. All that really does is build a stronger base and foundation. Having said that, and looking at these spot charts, I'm really excited to what I took the time and got buried in this past weekend. I'm not ready to start introducing it to you guys yet, but I will be. So I'm not even going to tell you other than a little teaser, but I'm personally very excited about it, and I know other people that I showed. So we're all working on it together because I brought it into our meetings yesterday, and that means all the strategy specialists as well as all the rest of the staff at Zang Enterprises. Now their job is to tear it apart, and then I'm going to bring it to you guys, and you can see what's going on. Also, did we finish editing the one video for the dime cards?
Yes, we did.
Okay, so do the strategy specialists have access to it now?
They should.
Okay, so let's double check on that. But everybody, thank you very much for calling in for these wonderful dime cards. It's not too late, still do it. And just know that there is a video associated with it. So what I'm asking the strategy specialists to do is to send you that very short link. So when you give this as a gift, if you can get them to listen to it for under 5 minutes, that will give you a little bit more inspiration for them to understand why this is so flipping important. So, and if you don't get it and you want that link anyway, just call us. We're happy to give it to you because we're happy, look, we want you to have the ability, and everybody, not just you, but everybody, to have the ability to make educated choices that actually puts your best interest first. It's what it's all about for us, that and getting sound money back in the system. But you may have heard that last week, the Treasury bought back 12.5 billion debt, which is the highest and largest buyback, and they're calling it here a rescue move in U.S. history. What does that tell you? I'm going to show you what that tells you. First of all, what you are looking at is the gold holdings of the U.S. starting in 1913. And I've shown you this in the past, but that would be a run on the dollar as foreign governments sent in dollars and pulled the gold out of the U.S. system. This was really a big, huge problem, but I wanted you to see that run. The reason why I wanted you to see that run is because gold backed the currency. So when there was that run, it showed a loss of faith and trust in the U.S. dollar. And we're seeing the same thing. We've talked about it over and over again, but here we go. Foreign holders of our Treasury bonds peaked in 2008, which is when I hold to this day. That is actually when the system that we knew died. And you can see that that run against the dollar has continued. And I hope you can see how much those two runs on the dollar, that loss of confidence is shown, because that goes back to why the Treasury actually had to buy back that debt. But it's even more than this. Let me show you what I'm talking about. Because year-end funding strains, when they have printed, when they have printed all of this money, and this money does not just evaporate once they print it. We've talked so much about the devaluation trade. Where is all that money going? Why are there year-end funding strains? And what does this mean? And what's going to be the outcome of it, right? Well, the Fed could start adding reserves to the system. So that very top chart that you're looking at there is the Federal Reserve balance sheet. And what they've been doing is trying to, quote unquote, normalize it and reduce that balance sheet, because it is a challenge. If all it does is go up, then that's really a big problem for the Federal Reserve, because really what they're doing is they're issuing this debt and they're buying that debt back, and therefore they are monetizing government spending. Not a good thing. And so I say, and I agree with this, that we're going to see this balance sheet, or the Federal Reserve, buying a lot more treasuries. But it's underneath the surface of that, which is that second chart below. What you're looking at here is the Treasury's, the green line is the Treasury's general account. So I goofed this up. I'm sorry. Let's see. Here it is. Those are deposits, right? Now you can see when the Federal Reserve printed all of that money into the system in 2020 during the COVID crisis. Okay, well, the individual's accounts may be down, but you can see that once people make that deposit, that is what would be considered sticky. They don't generally pull that money out really rapidly. So that's general deposits. Here's the Treasury's account. Oh, I really goofed it up. I'm so sorry. This is actually much more important, but you can see that Treasury general account went up. That green line went up as the money in the Treasury was being sucked out of it. Because remember, we've talked about this before. When the Federal Reserve prints and creates all of this new money, well, that's how they generate their income. It's the difference between the cost of creating that money and what they sell it to you and me for. $100 on a $100 bill, it's 9.7 cents, presuming that it's a physical bill, but it doesn't cost that if they push a button and create that $100. But you and I have to work 100 times harder for it. Any of that excess then goes to the Treasury. But for the last now 5th year in a row, the Federal Reserve has not been able to send any excess to the Treasury. This is a huge problem. This is all an indication of a system that is breaking down very rapidly. And here's the thing. Every time they use their QE button and they do all of this manipulation, the next time they need it, it doesn't work as well as it did the first time. So in 2008, that $800 billion stimulus that they put in, well, that did more than the $20 billion that they put in now, because it loses its impact, it loses its power. And that's why when you hear me say that the Federal Reserve is between a rock and a hard place, it doesn't matter what they do. There is no way on God's green earth that any of this can be repaired. It's one of the big reasons why I say we are absolutely at the end of this currency's life cycle. But I want you to pay a specific attention to that blue line, which is the reverse repo facility. So that was really created to give hedge funds and traders be able to inject capital into that system. And you can certainly see that we've done it, but you can also see it's at zero. And we're going into year-end funding needs. And we are referring to money markets in a rather big way. Let me show you this. You're barely going to be able to see it. Do you remember when we had this issue in 2019, September of 2019, just before COVID hit in 2020? That's that itty-bitty blip that I just circled. Look what they did in 2021. What are they going to have to do now? How much more of this garbage are they going to have to create? How much more debt is the Federal Reserve going to have to buy to inject this cash into the system so that you don't see and the public doesn't see the system falling apart? We're about to find out. And we're going to pay a lot of attention to it. And I'm going to give it to you in another way for clarity so that you can see it. Because what this chart is from the Federal Reserve are those overnight repurchase agreements. And look at, this chart goes back to what, 2001? Something like that. And the lines are itty bitty. You can't really see them because what they've had to do since 2025 is much larger. That's why it looks itty bitty. And this is not really a good thing. So you can see these are Treasury securities that are purchased by the Federal Reserve in those overnight purchase agreements. Doesn't that look like a crisis to you? You saw that teeny weeny piece in 2019. You can't even see it here. It's a blip. It's nothing. And that brings to the point, if you don't hold it, you don't own it, and these markets are very, very susceptible. And you can't see the internal plumbing and how that's breaking down. But that's really what I'm showing you. Whether you understand this or that or the other thing, you can see the extreme changes in these charts. That's really what I'm trying to show you. They are in a big, huge battle right now, and they want things to appear calm on the surface so that, hey, it's Christmas time. You can enjoy the holidays. You, the public, go spend. Take on more and more and more and more debt. Everything is hunky-dory. We've got everything under control. You look at those charts. And can you bring me back to the chart, please? That one. Does that look like everything is hunky-dory on the end with those big, huge spikes up? No, that shows panic. That shows breakdown. And you don't really need to know it in more detail than that. You just, I'm always talking to you about pattern shifts. And when a pattern changes, it means that something underneath has changed. And this is showing you it's changing in a rather big way. So if they do indeed go in, which there's really no choice, can they let the money market funds, can they allow the stress that's in that system become visible to you, you might not want to put money in a money market fund if that were the case. And then you might make a different choice. Because once you really understand what's happening to the money, I'm telling you, you make different choices. And you better make those choices ASAP, because this is showing you full and well a complete breakdown of the system. So now I will take questions, and we will start with the Theodora. How far away is it when we can start purchasing income-producing assets like air rights and water rights and other things? Do you have a ballpark time frame? Next year, 5 years? I'm pretty sure it is not going to be next year, because what we still have to go through in order for that to happen is an obvious, a noticeable hyperinflationary event. But what I just showed you is the system breaking. And when the system breaks, it can do it in a very big way. If you can remember what it looked like in September of 2008, we were getting signals way before that. That's probably why central banks began to load up on gold and not sell as much of their holdings in 2005, a full 3 years before it became obvious to you. But I started talking about this in a big way in 2000, and there were a lot of things that were happening in 2006 and especially in 2007, with a lot of things breaking down. And so do the absolute specifics matter? Not really. I don't think they do. I pay attention to the specifics, but do you absolutely need to know exactly what this little piece is and this little piece? No. What you need to understand is that there is a pattern shift that is happening right now that is not good, right? Why isn't it good? Because the central bank should not have to buy back the Treasury bonds, period. But I showed you the run. What does that mean? A lot fewer buyers of that. And since those treasuries are the foundation of the global financial system, that means that they count on buyers of the treasuries. And yes, President Trump signed into law the Genius Act to create a new artificial market for treasuries and for dollars. Is it going in place fast enough that this can continue to be covered up? No. And in my opinion, and I could be wrong because this is absolutely my opinion, I don't have any hard data on it yet, is that those stable coins will be used to usher in and make visible that hyperinflation. So we still have a little ways to go for that. And the public has to lose all the confidence. So all of this printing that we've been talking about this morning, that is most likely to speed up the rate and the height of the inflation. And it's the holiday season, so people are feeling, I don't know, I can't say this about everybody. I'm sure there are a lot of people that are very stressed going into this holiday season, but it is a time of hope. And so people will be more hopeful. But hopium is not a plan. And hopium will not get us out of this huge mess. So I would say probably closer to 5 years, but let's track it. That's all we can really do, because timing is the biggest challenge of any technician. I could tell you what is most likely to happen next, but to tell you exactly the moment that it's going to happen, I'm sorry. I wish I could. I need to get a crystal ball. I need to get one. But even when I had one before, it did not tell me very much. So I would say probably closer to that 5-year mark. But that doesn't mean that you can afford to sit here and not get into proper position. And I cannot stress that enough, because people will procrastinate. and there's this reason and that reason, or they'll even call and set up their strategy and then not execute it. But just because you have it set up, you got to execute it. You have to get it pushed through so that you have not just the physical gold and silver, but you have all pieces of the mantra covered. So that would be my best guess, but stay tuned. And Gina Young 6900 says, "Hi Zang Gang, hi Lynette. I love watching you on Tuesdays and I love you being here. Really appreciate it and love your enthusiasm too. Do you think buying treasuries is a good idea? If not, why? If yet, what length do you suggest? Also, do you have gold backs yet?" I think we are coming to conclusion on the gold backs, but I have not yet heard, and I will announce it. So we want to follow up and see where we're at. But I think we are, in the last meeting, I think they were just finalizing everything. So soon, soon, soon. Now, let's go to treasuries. There's a reason why you might hold treasuries. If you needed to do it for a short-term income play, then I might look, everything is so specific to the individual. So that's the way I need you to take this. This may or may not be applicable to you. And personally, I do not own any treasuries. I own this because this is still our tool of barter, so I got to work with it, okay? But let's take into account how bonds work, because it doesn't matter what kind of bond it is, works the same. This is interest rates. This is the market value of the bonds. And I'm glad you brought this up because there was a piece that I didn't talk about on this, which I should have talked about. So thank you for that. Okay, so when interest rates go up, the market value of the bonds go down. When interest rates go down, which is what they're trying to engineer now, then the market value of the bonds go up. If this is when it's issued, as you can see, the longer the date, the greater the fluctuation. So when you're asking me about dates, I would say that if you are indeed going to do something like that, then you want to go to shorter dates. They are probably going to push those interest rates down. So, I'm just not, you cannot fix a too much debt problem with more debt. And treasuries are counterparty risk. So I could see a reason for short-dated treasuries, maybe max a year. Maybe if you have this need of income, you kind of build this ladder where you have them coming due on maybe every 3 months or 6 months, and you have them coming due every month. So in other words, you'd buy a 3-month T-bill, a 4-month, a 5-month, a 6-month, and then when that 3-month matured, you'd go out and you'd buy the next bond out, and that way if you needed to pull the cash, it was always liquid for you, and so the income came to you also on a monthly basis. But you can see the pain on my face, right? Because it's hard for me to tell you to go into a system that I 100%, a bazillion percent know that is destroyed already. And the only difference between that destruction is your awareness of it. And I just showed you all of this stuff. And so that brings up something else that I really actually wanted to talk about, because while the Treasury did retire 12.9 or whatever that number was of treasuries, these were older treasuries and they were off the run. So there's two types of treasuries. There's on the run, which is new treasuries that are issued that would be going into those that are required to hold treasuries. So there's actually a market for them that's going down a lot. That's what I've been showing you. But still, there is a market for newly issued treasuries. And then there off the run, which is the secondary market, and there's not a big market for them. Having said that, what the Treasury actually did was buy those older treasuries and create a whole lot more new money. But those treasuries, most of them, their coupons were, or so the interest on them were less than 4% and even going down to 2%. And then they bought other treasuries with a much higher coupon. Do you see the problem with that? That would be like you have a mortgage at 2% and you refinance that mortgage at 6%. It costs you a whole lot more in interest, doesn't it? And we're already compounding interest. So why would the Treasury do that? It's because of that liquidity piece, because they know, and liquidity is the ability to buy and sell quickly without disturbing the price action. So what the Treasury has just done is cost us, the taxpayers, an awful lot more interest on $12.8 billion of off-the-run treasuries to bring in a little bit more liquidity in the markets. This doesn't make a lot of sense, right? Just like if you didn't really need to, but it also does show how that loss of liquidity in the treasury market. So then you ask me about treasuries. I have a hard time with it. It's debt. That's debt. It's debt. But depending upon an individual's circumstance, there could be an argument made for it, but I really wouldn't want to do the argument. It's hard for me to tell you to do something that I'm not doing personally, and I don't own any treasuries, even at this age. I don't own any treasuries. That has not always been true, and I can't say 100% that will not be true in the future, but this is a too much debt issue. This is a final destruction of this issue. And treasuries is how they create that crap. So you've got to do what you're comfortable doing. Even though I held a license, y'all need to know I do not hold that license anymore. And so all I can give you is my opinion. And regardless of what I say, you have to do what you are comfortable with. But I'll tell you, if you're talking to any kind of broker out there, then a question that I think is really, really, really important for you to ask is, how is money created and supported in this system? And we all know the answer to that. And this is the answer they ought to give you. And if they don't, you better turn and run. Full faith and credit of the government. So let's translate that. As long as you trust the government, you have confidence. This is a con game. There's nothing backing it but your confidence in the government. Then you will continue to loan them money. Extend them credit. Foreign governments aren't doing it anymore. I showed you the run chart. Why? Because we're not trustworthy. That's why. So the dollar's not trustworthy. So I tell you what I say. You do whatever you want with the information. I used to do a lot of business in treasuries. It's where I cut my teeth as a stockbroker. You do what you want. Okie doke. Linking Atlas. Question. Which currency is the safest in 2026? US dollar, Swiss franc, AED, or Singapore dollar? None of them. None of them. None of them. But if you ask me what money is the safest in 2026, sound money. And there is no, that's like I was reading this article, and I don't have the paper in here. but they were talking about the Chinese yuan and how a night, the example they used was a night in Manhattan at the Waldorf Astoria starts at $2,000 a night. But a night at the Waldorf Astoria in Beijing is $340. So, I mean, wow, look at that. But what they're talking about is a relative basis because the dollar is so much stronger against the Chinese yuan. But here's the reality. All of them are losing purchasing power. And if you doubt what I'm saying and you want to check what we're talking about with the US dollar, the Swiss franc, the AED, or the Singapore dollar, just go into xe.com, right? That is a currency converter. Pick any one of those currencies that you want and do it against the US dollar, spot silver, and spot gold and see how they perform. But the reality is every single government debt-based currency is going away. There are no exceptions because it's all built on debt and it's all built on corporate debt because central banks are private. That's a corporation. It's all built. That's what we work for. We work for corporate debt. So yeah, none of them. Absolutely none of them. But you want money? Then you want sound money. Physical gold, physical silver, safest thing that you can do. That's why all the central banks, well, not all of them, but that's why the global central banks buy gold. And they're continuing to buy it at the highest level ever. And we're not even told how much they're really buying, but. And Colleen Allen 3382 asks, could you please explain banking bailouts so that I could tell this information to my children? And I did something on the bailouts. There's bailout and bail-in. And actually that probably would be a really good topic. Bailout and bail-in. Because a bailout is where taxpayers, our government injects taxpayer money into a failing bank. And it's kind of a problem, but that's what we did in 2008. And people lost their mind. A government official lost their mind over $800 billion, which now is obviously chump change. The bigger concern, because the banks were deemed too big to fail because they are systemically integrated on a global basis. So a big failure of a large bank like a JP Morgan or UBS or any of those guys would have systemic repercussions if they were not bailed out on a global basis because they're all intertwined. Now, I think what you're actually really asking me is about a bail-in. And that's where a bank is failing and they take customer deposits because they're not really, once you make that deposit, that's not your money. You have actually loaned that money to the bank. So it's really more of a bookkeeping entry. But they take your deposits in a failing institution and they convert them into shares of stock in the failing bank. Now, since they tested it at the BIS, they tested it in a Cyprus bank back in 2013. And at first, they took everybody's deposits, all of the deposits. But then the world went, what about deposit insurance? What about deposit insurance? So they backed up and they honored the €100 deposit that was insured. So if you had more than €100 in there, that money was gone. It was just turned into shares of stock in a failing institution. But if you had less, if you had €100,000 or less, you still got a paper statement saying that you had this, but there were limitations on how much of that you could take out on a daily basis, which wasn't but I think a couple €100. So you had no access to it for, I think that changed, again, I'd have to go back and look, and I want to say 2017. And I could be right or I could be wrong about that. But if you guys want me to do a short piece on bailouts and bail-ins, I can certainly do that, because the Bank for International Settlements came out with a paper after Cyprus did the bail-in, showing how they would do the bail-in with or without the deposit insurance. And by the way, they do call the deposit insurance a scheme. And it is a scheme. It's designed to keep you comfortable. I don't have to worry about it. It's insured. Yeah, by a government that can just do that and print the money to put it in there and devalue everything else that's out there. That is a scheme. This whole thing is a scheme. And so I want you to get out of the matrix, out of the scheme, into sound money. I mean, that's what I've done for myself. That's what I'm hoping that you will do too. So bear with me, Colleen, but maybe this little snippet will help. Simply put, a bailout uses taxpayer money first. A bail-in uses deposit money first and then taxpayer money, simply put. And lifelong learner lady, last Tuesday you mentioned something about a travel bracelet. Can you tell me more about that? Is it a bracelet that holds a coin? Well, we are just about in process to design these, but yes, out in the world, they are bracelets like my travel bracelet, which I'm not wearing today. I almost wore it, but the travel bracelet that I'm not wearing today, they have these bezels, and in those bezels, you can put a coin. So you can have 1, 2, 3 gold coins inside of this bracelet. But now the jewelry that we're designing, I don't want to give it away too much, but it is being designed so that it is very easy, rather than taking a coin out or anything. You'll be able to do those, but those are out there already. The bracelets, necklaces, the travel jewelry that we're working on, it's going to be easier and better than that. And I really wish we had them at this point, but we don't. But I would think that we should be able to have that in place for next year, right? Don't you think so? Yeah, we'll have it in place, and we'll have it sooner than that too. So stay tuned. Honest to God, we've got so many moving parts, and we all are just pedaling as fast as we can. We're getting very close to having our website and shopping cart up. That is taking a lot of time, but we'll get there. And La Domina Aroka, should I dump the treasuries in my 401k? You know, I'd have to look at your 401k in general. And in fact, and I shouldn't say this because please, there's only so much time. But looking at people's portfolios, right, and knowing that they're more than likely going to be pushing your rates down to create inflation. When they push interest rates down, is what they're really telling you is the dollar is overvalued, the euro, the yen, whatever, and they're going to pull down its value even more. I mean, the stock markets are so extremely overvalued and volatile. We've got a too much debt problem. If you're going to hold treasuries, do it short. Just do it short. Though remember, too, if you've got the longer dated treasuries, depends on when you bought them. If you're buying new longer dated treasuries now, and they do indeed push the interest rates down in an attempt to just keep more money floating in, then the market value of the bond goes up. But will the market value of the bond go up more than or equal to the purchasing power value of the dollar, the euro, the yen, whatever, going down? No, it never, ever, ever does. So if you're currently contributing to a 401k, then the likelihood of you being able to take a distribution other than a loan, other than an in-house withdrawal rollover election, there's not a whole lot that you can do. Don't be fooled by the private equity. I will say that. Don't be fooled by that because they're coming for your wealth, and those are not liquid. Short-term treasuries is probably a bit safer. I mean, I just did this huge portfolio analysis, and it was disgusting what I saw. Okay, not a surprise, but disgusting. I'm gonna remind you that most ETFs have zero cash in them or very little cash in them. And what that means, if you're sitting with a bunch of ETFs, that if there was a run on that ETF, then they'd have to do one of two things, and probably will do both of these. Number one, they'd have to sell off holdings to meet redemptions. Number two, they would halt redemptions. So I think this is a great time to be looking at whatever of those kinds of things that you absolutely must hold, to see how much cash they have in there for redemptions, and make sure that outside of that 401k, you are properly diversified so that if you lose access and all of that goes to zero, you can recoup that. But you do that outside of the 401k. Inside, if you can hold gold, hold it, but it's just not safe there. If you don't hold it, you don't own it. I wish I could say something more about that, because I'd really like to be able to say, now is the time to do this. This is a great time to position into stocks because all those zombie companies have been wiped out. We can look at a balance sheet and know what the truth is instead of all of this off-balance sheet stuff, meaning you have no clue, you have no idea, and there's no way for you, really, the individual, to know if this is a safe company, if it's going to make it or not, you know. That's why just sitting in gold, holding your purchasing power intact until that washout occurs, I'm sorry, but to me, that's the safest single thing that you can do. But there are other needs, and that's why the strategy is built in layers, and that's why the strategy is customized to you. Because it's one thing if you're in your 40s and you're still working, so you have income and you have the ability to do this, that, or the other thing. And it's another thing if you're retired, depending upon the dividends that they pay you for your income, that strategy then needs to be different, right? Because it's two different circumstances. So that's why we always have to start with your goals and meet you where you are and then help you get to where you want to be, because there's a strategy to address all of that. So yeah. Silverman 5707 question, are copper, platinum, and grossly undervalued? You know, I would have to, I can't just give you a blanket answer on that. My focus is always on the monetary metals because of where we are in this trend cycle. So, and I did promise you guys, and I do have that up. I just was working in this big project this weekend, and it took all weekend. To give you fundamental value on all of that. So I will add those other metals to the list on that. FV on copper, because I get enough of these questions, but my focus is on the monetary metals because this is a currency life cycle issue. So that's why that's really where I heavily focus. And while I do, I mean, there's some platinum in this. I don't go out. I have in the past bought actual platinum coins, but that's not really a focus of mine because I'm so focused on the monetary metals and being prepared for the hyperinflation that we're going to have to be dealing with and for the opportunities that will present during that period of time. That goes back to really understand the fundamental value of all income producing assets, which was really where my focus was going to be, on the fundamental value. But I get enough questions about copper especially, and platinum and palladium. I'll do that too. And Deb Warner UF1OR says, Lynette, thank you for your tutelage and sage knowledge helping us through this entire process. It's my pleasure, and it is actually my honor. It's more than my pleasure. It is my honor, because you guys enable me to do what I was put on this planet to do, and you appreciate it, which is really awesome. When gold revalues, will silver revalue at the same time, or will they revalue separately? No, they typically revalue at the same time, because gold is the primary currency metal and silver is the secondary currency metal. But do understand that typically, although I've seen it more actually with silver's outperformance at the moment, that usually gold outperforms silver in almost every case because it's the primary currency metal. So no, they'll do it at the same time. But I can say by a wide margin, gold typically outperforms, but silver definitely holds your ability to purchase your food and your same stuff through this mess. So no, they revalue at the same time. And Chad Wolf Schedule Steinhow, 9697, should I still buy silver? 100% you should be buying silver in all of its forms, because it is still severely undervalued. You cannot count on Wall Street for true price discovery on any asset, because it's been turned purely into a trading market. So yes, you should definitely still be buying silver and gold, both severely, severely, severely undervalued. Yep, buy them. Get your strategy in place, get it executed. And Douglas Tavis, 6436. If gold is bought back or confiscated again, do you still feel very confident that all our pre-33 gold will be safe? And if they don't confiscate, but instead tax gains, what would that percentage be? Well, my darlings, that is actually what I was working on all weekend. So I still have a lot of work to do, because this is like so important. However, yes, I do believe that our pre-33s will be safe, because they are in a different category than your bullion gold. So yes, I absolutely do think that they will be. I'm very confident about that. And what would that taxation be? Well, depends on how much they feel that they need to tax you in order to keep you away from it. But on the pre-33 collectible side, probably not as high as they would do it on the monetary bullion side. Some say it could be up to 99%. That's some of the stuff that I was reading this weekend. I don't think that they would go there, because I think it would be such a huge revolt. But it will be high. It'll be higher, and it is right now. It's higher on gold, no matter how long you hold it, than it is on stocks. Why? Because they want you in the stock market. They want you in intangibles. They don't want you in sound money, because no matter what that rate is, it's still better than when you lose 100%, even if they put it at 75% or 90%. Right? I don't know what that number is going to be, but you have to have some principle on the other side of this to work with, or you're SOL. So whatever that taxable event is going to be, they're going to sit down and say, because this is how they work. They might spend 2 minutes on policy, but 8 hours on how it's delivered to you, because they want you to cooperate and agree. So, yeah, I don't know what that rate will be, but this is what I was buried in all weekend, and we'll continue to work on this hard. Right now, it is out to everybody to tear apart. and thoughts put in. So bear with me on this. This is going to take a minute, and I'm going to take as much time as I need to. But that doesn't mean that I can't bring out this snippet and that snippet and that snippet while I'm working on the whole piece. But especially with what I was working on this weekend, yes, I'm extraordinarily confident that should there be an overt gold confiscation, our pre-33 coins will be very, very safe. And I'll show you why. You'll see why I'm saying that. And Chad Wolfensteinhow, 9697, I don't think the government will confiscate our gold because they're still selling it at the mint. That doesn't mean anything. It would be pretty stupid to sell gold just to take it back. Why? Especially if they can get you to hold it. So they're making money on the meantime, and then they're taking it back. Yeah, no. I would disagree with you, and time is going to tell, but I believe that's just hopium, because one of the things that I did discover, and I'm digging into this more because I think there's a lot more, is that where I've been telling you that gold has been confiscated 3 times historically in the U.S. No, and you know what? How easy would it be, Jessica, for you to pull up just that little list that I know is not complete, but in the piece that I was working on over the weekend, if you could pull that up, I'll show you. And I'm telling you right now, I know that it's not complete. I still have more work to do on this. But in the data, in the U.S., we've confiscated gold either covertly or overtly, not 3 times like I was saying, 5. And there are other means to do it. So understand that this is a work in progress. Do you know which PowerPoint it is? Yeah, the NUMI one. So, yeah, your opinion does not matter in a court of law. That's why, you might think that that's your money in the bank. No, it's not. That you may think that that's your wealth in your brokerage account. No, it's not. Legally, you are not the owner. You are only the owner if you hold it and it is absolutely in your name. If you kind of that's the one. This is the one. That is absolutely the one. Yep. So here's a little snicker snack of what I was working on this weekend, especially for Chad, so you can see it for yourself. Okay, let me just go. I'll make it more clear just by doing this. Okay. So I know that this is hard to see, and I'm also sitting here telling you that this is not complete. And where there are no numbers after it, so USA 5 times, UK 3 times, Australia 2 times, India 2 times, Germany, Italy, Japan, Soviet Union, Tanzania, and Burkina Faso, those are all one time, and some of them are ongoing. So saying that they won't is hopium. And hopium is not a very good plan. I like to go, what if I'm right and what if I'm wrong? And if I can do something that it really doesn't matter whether I'm right or wrong, that's what I'm going to do 100% of the time. So, and Whistling Freedom, silver is the new gold. Hold. I don't know that silver is the new gold. Silver is silver. But yes, you're right. I agree with you 100%. And not just hold, accumulate more. Convert this junk into sound money. They're devaluing. They want to lower the interest rates. That's telling you that this stuff is overvalued. That's the real trend. It's not whether the stock market's going up. It's not even the silver market going up, the gold. It's not that. It's the value of this going away. Your purchasing power value. That's what matters to you and me. And Capram MD1 asks, Patrick Cube asks, If all AU businesses like Zang are required by law to, this is such a good question, thank you, to submit ID and holdings of clients, is there immunity to prevent compliance? I'm going to Patrick Cube, our Tampa Zang gang. We are fearful of discovery of purchases made. This is preventing further participation and purchases of AUAG metals. Please help us understand the level of safety. Thanks. Well, I can tell you this. We definitely have to follow and cross all our T's and dot all of our I's because we need to be able to stay in business for you. However, there is no part of this transaction that we are legally obligated to report one way or the other. Therefore, we do not. And the other part of this is because there are other metals like American Eagles. I'm not gonna fib to you. American Eagles are also at this juncture non-reportable. Now, could that change? Absolutely, that can change. But I can tell you personally that this is what I give as gifts. I give gold and silver as gifts. Until, if they force me to tokenize it, then I probably will personally have to comply because there is no choice. But do you see why it's so important to get sound money on a state level, legalized as money once again, and get it in the global system to be redeemed? Because we have lost almost all privacy and they are working on making that so. So at the moment, that we have absolutely zero privacy, they are tracking absolutely everything. So at the moment, this stuff, non-reportable on the way in, non-reportable on the way out. Of course, I know all good citizens always pay all taxes that are due, but we are not legally obligated to do that. And so while we don't have to, we're not going to. When that changes, I'm going to have to let you know, and we'll have to really understand the laws, but at this moment in time, there is no legal obligation for reportability or on American Eagles as well, on the way in, on the way out, at any level of quantity. So, and Patrick Cube, because you're in there, and if you have a group and you need me to come and speak to them through a Zoom like we're doing here, I'm also happy to do that so that anybody can ask me questions. It'll have to be scheduled in, but if you just send the request in through hello@LynetteZang.com, it'll go to Natalie, and then Natalie will be able to schedule that because I want to be able to address any of the concerns that people have. So, yeah, right now, no, not required by law. Now, for cash, that is required by law. Anything above $10,000 or higher, that is required by law. That's why it's actually better if you do a wire or a personal check or something like that, because then that reportability is not required. And Babri Mersma says, I doubt pre-33s get any special consideration the next time they confiscate. It'll be interesting to hear theories as to why it might. Oh, well, first of all, lots and lots and lots of historic precedents. But additionally, you could have a coin. You know, I've shown you the ultra rarities chart, which a lot of those coins go for the millions of dollars for 1 ounce of gold. So the reason why it would not, this is what I think it's going to look like. And I'm either going to be right or I'm going to be wrong, but this is what I think it's going to look like. Let's just say that spot happens to be at $5,000, just to pull a number, when they decide to do an overt confiscation. Okay? Well, they want you to cooperate. Where in the U.S., where is most of the gold that individuals owned held? IRAs. And that's all bullion gold. So what they're going to do is they're going to say, and look, we're going to pay you $7,000. Well, most people thinking that Wall Street is accurate in how much gold or silver would be would go something like, but wow, gold is only worth $5,000, but they're willing to pay me $7,000. Okay, I won't, well, and I have no choice anyway because it's in an IRA. So I won't complain about that because they're paying me so much more than it's worth, just like they did in 33. So they do a big sweep. But the person that paid $15 million for one coin, are they turning it in for $7,000? I don't think so. Plus, look at the laws. If you see what you can hold inside of an IRA, you can't hold this in an IRA. You can't hold this in an IRA. You can hold Bitcoin, you can hold real estate, you can hold anything else inside of an IRA, but you can't hold collectible coins. I don't know why, especially this. They're all standardized. Why? Because they want a different classification and a different category. And the person that can afford to spend $15 million on one coin, I don't know, call me silly, but my bet would be that is either a person that writes the laws, like Treasury Secretary Wooden did when he put that 33 law in place, or has the ability to influence those that write the laws. I could be wrong, but just wait until I'm finished with this piece. And I'm not going to have it for you next week because I would imagine it's probably going to take me, like, how long did the bar piece take? That was like 6 weeks-ish or something like that before we got through all of that data.
I think it was closer to like 2 months.
Probably so.
It was up there.
Yep. I mean, these large, important pieces, you know, you got to take your time with them. Because there's so much digging and it's layers, right? Everything is layers. So I look at it from this layer and then that leads me to this layer. And especially when I put it out for our whole, community to look at, because they're all looking at different things too. So that's why I said I'll bring out a snippet here and a snippet there as we're going through. But, again, I would say, Bob, that it's kind of a random opinion, not based on history. But do you really think you're going to get somebody that paid millions of dollars for this, or even thousands of dollars above what they would pay you for bullion? They're not going to get compliance. And this stuff is not held in an IRA, so it's not easy access for them. And not many people have it. That's another thing. They want where they're going to get the biggest bang for their buck, and they're going to do that with bullion. And after they get it, that's when that revaluation happens, right? They don't do the revaluation while you're holding it. They do it after they've taken it away from you. So we'll find out if you're right. And if I'm wrong, but there's way too much historic precedence. And even today, why can't I hold these in it? Heck, they're even going to let private equity and all these crypto and all of this stuff in there, but not collectible coins. Different category. And they're my theories, one of them, but stay tuned, I'll bring you more. Ruby's 200. How would the government know if you've bought gold or silver anyway? Exactly. It's not reportable. It's just like if you're building out the strategy and you know that the first part of it is going to require some level of cash, why not get the cash now when it doesn't have those chips in it? Right? Then it's cash in the wild. You want to do things while you have the opportunity to do them, because you aren't going to know 1 second before you lose all of your choice. You're just not. And Spicy 8864, Do you have a PowerPoint I can send to my family and friends detailing all of this in succinct detail and with sources? I love your videos. You break it down so nicely. Thank you so much. I am unable to reach my family. That, my friends, is what the dime cards are about. Did we show that little video on here? We haven't shown the one that if you do the dime cards, or even if you don't, if you just want this video, honest to God, there's so much data, I can't break all of it down. And plus, if you do it more than 5 minutes, it's kind of like their eyes glass over and they're not paying attention. Do you want to show them that?
Which one?
The 5-minute dime card one that they will show to their friends and family, which is simply designed to pique their interest so that they're ready to learn more. I can't cram all of this down somebody's throats. You can't either. They're not going to pay attention. You know, they're going to just go, bleh. All of my videos have all of those links. And for this big one, well, I'm sure we're going to use it in a whole bunch of different ways. And of course, I've got all of the sources because that's what my training is to make sure that you have the sources. So there'll be more for you to use. But this little 5-minute video is a great place to start because you can probably get them to sit and watch for 5 minutes, especially if you hand them one of these dime cards, right?
The sound money pillar. The dime card is the 2-minute.
Do the one that we're giving to whoever is requesting it to give to their family, whether it's the 2-minute or the 5-minute, whichever one we're doing for that. Okay, so you're going to see this and see, and again, you know, tear it apart. Whenever I do something, tear it apart, let me know, because my goal, honestly, every time I sit down and do these, I'm trying to do them better and better and better so that they're more easily understood. You ready?
I'm ready.
Okie dokie. Congratulations. You have begun your education on sound money. So I want to put it to you this way. Picture yourself on a riverbank. The floodgates open and trillions of fiat dollars surge downstream. Prices are swept away. Purchasing power eroded. The ground beneath you unstable. Yet gold and silver rise above the torrent. Solid, immovable, immune. While paper currency is carried off, these metals give you firm footing. The call is simple. Shift your paradigm. Climb to the high ground of sound money that cannot be inflated away and safeguard both your wealth and your freedom. Now I'm going to give you some of that background so you understand it. Because when money was first created and sound money was used, well, we had a very strong foundation. These are the 4 pillars of money. This is the way it was sold to the public in the beginning, as a unit of account so that you can measure, as a medium of exchange for barter, as a fair unit of payment for fair payment today, and as a long-term store of value so that no matter when you use this money, you were always fairly paid for the labor that originally created it. Only gold meets all of these requirements, though many things have been tried. And what gold in the system actually does is it forces governments to have fiscal responsibility. What a concept. And it protects your purchasing power. But governments like to tax and spend, and so they put inflation into the system, and they created fiat money. And that fiat money mimics all of those other attributes of the fair money, sound money, except for the inflation piece. And that is by design. And they knew when they set up this system that people do not understand what sound money is. And the creator of Keynesian economics, which is what our foundation is based on today, by a continuing process of inflation, governments can confiscate secretly and unobserved, an important part of the wealth of their citizens. And while the process impoverishes many, it actually enriches some. And that's why we have that K-shaped economy today. And you have to decide if that is okay with you. Because there have been over 4,800 currencies that no longer exist because they've been inflated away. Do you think the dollar is going to be any different? What is your personal experience? Because that's what we have. That is actually what we're going through right now. So the question is, will the dollar be next? And the answer is, it's already happening. When sound money became too expensive to create, they just go to cheaper money. So in 1965, they took silver out of our monetary system. And they did this by design. But here, you are now learning about sound money that cannot be inflated away. And it's important for you to understand this because not all money is created equal, and not all dimes are created equal either. So prior to 1965, we actually had silver in our monetary system. Some of you may remember that. And then they brought in the fiat money, which looks the same on the outside. It's the same size, it has the same face value, and people think, oh, it's just the same. But the pre-65 dimes are all silver. Well, they're 90% silver. Whereas any dime that was created 65 or later is just junk. There is no silver in that at all. And so what I'm trying to show you here is that this silver preserves your purchasing power. And here's how you know what I'm saying is true. Because look at this food basket. You've been to the grocery store, and even the spot silver market that you hear about, well, you can see from this basket of food provided by the Bureau of Labor Statistics back in 1913 and that same basket today, that spot silver maintains your ability to purchase the same goods and services over time, when officially we only have 3 cents out of the original dollar's worth of purchasing power left. So please, I hope you can see that the reason why the government cannot inflate sound money away is because it's used in every sector of the global market. So it has full function and the broadest base of demand. And in the end of the day, this stuff is used in one place. This is used every place. Isn't that what you want to protect your financial future? How many times can you be lied to and you do not know the truth? But now you're beginning that journey. And if you'd like your own paradigm shift card, you can just give us a call or follow this link and you can get your own paradigm shift and also more information. Please call us today. Do yourself a favor. Educate yourself. We're here to be of service. So hopefully it will start to make a difference and people will start to go, well, you know, and it doesn't hurt that spot silver is above $60 because when things go up, did you notice the cryptocurrencies? You notice the markets, right? When things go up in the markets, then people start to pay more attention. Do I think that that's really... I mean, it's all a big fat lie, but try that because you can't just dump a whole bunch of information and go that they expect people to really accept it and understand it. It's layers of learning, and so I'm so happy to be of service to you guys. I really am. But honestly, I have spent my lifetime going, how can I explain this better? How can I do it better? I remember all the times I'd say, okay, how can I explain this in a way that people could understand it? And I learned how to do that, and I thought I was doing it pretty well. But there's another piece to that. And it's not just how can I explain this so that people understand it. It's how can I explain it so they understand it and then it can go into their hearts so they really understand it, and they have the ability to take action. It's worked with you guys. You've taken action, or at least a lot of the people that are watching this, you've taken action. Was there like one little piece? What was the and actually that would be helpful for me to know if you can remember. What was your paradigm shift? What helped you start to understand that, number one, you needed to know more about this and you needed to take it to heart, and then you actually got to the point where you were ready to take action on it and to protect your purchasing power and yourself? Maybe if you can send that in as well, so that I can digest that and try and use it, because I want to help you get to your families. We've got a goal. 3% of the global population converting their garbage fiat into sound money. Just 3%, that's it. So anything that we can do to help you, because you're the Army. That's why I introduced it here, the dime cards, because you are the Army out there to help spread the word, and I can't even tell you how much I appreciate it. So the more you can help me do my job better, the more I can help you do that job better too. And I really appreciate it a lot. And Cool Brother G 5401 asks, Lynette, can you elaborate on the chips you referenced about the bills? Well, in my reading from the IMF, when they were talking about breaking below the lower zero bound, and so that was like one of my most favorite reports from the IMF ever. It's really an easy read, and they give you this 18-point step on how they would make the transition. But they talked about once we are fully electronic, then there are no limitations to how low we can push interest rates. That's breaking below the lower zero bound, right? Because what this does, what the paper does, is it fixes the level of what they can rob you, what the inflation is that they can rob you from, right? So they need to eliminate that. So they have talked about putting a chip inside the bill, like you can see this strip, right? They'd put like a little chip in there that would be tied to interest rates, right? So if you had cash that you pulled out and you were sitting on, which you should have anyway, and you went to use it at the store or redeposit it into your bank account, that chip would register the negative rates and where the underlying principal of the bill should be. So instead of using this, you've got a face value of $100, even though, yeah, officially there's 3 cents left out of the original dollar. So it's put this at about $3. What you would be looking at when you go to use it is that it would buy you that much less. It's not going to show up as your principal, your stated value of $100. It'll show up maybe as $40 or $30 or $20 or what have you. So it's a chip that enables the central bank to force negative rates even if you're using cash, because they have stated that they don't want to pull the cash out of the system because then you would notice. They want you to volunteer not using cash, which if you look at what happened in 2020 and moving forward, that has really sped that loss of cash usage up. And there are a number of stores and restaurants and businesses that won't take cash anymore, even though it's really actually illegal for them not to take cash, since it says right on this bill, this note is legal tender for all debts, public and private. So it's actually not legal for them not to accept cash.
Someone in the comments shared a story of exactly that. They said, around 2017, daughter and I could not pay cash just to see a movie. Gave my cash to a lady who then used her credit card so we could just watch the movie.
Yeah.
Is that crazy?
Well,
That's
unfortunately, no, it's not crazy at all. And they've actually talked about reducing cash usage since the 20s, the 1920s. These are long-term plans. That's one of the reasons why we've been trained to think short term, right? Oh, that happened 10 seconds ago. That's old news. That's not really true. These strategies are executed on a long-term basis because if they change things too abruptly, you notice the change. If they do it slowly, it's the frog in the pot of water, right? So the reduction in cash usage, that's been a long-term goal. And, the COVID crisis really pushed that up quite a bit. I use cash regularly because at this point, I still can.
Even cash promotes fiscal responsibility, right? Like say you go grocery shopping. If you go with a stack of cash, you're limited to the amount of cash that you have. And the credit card, it's like, oh, I don't really have it, but I'm just gonna keep swiping until you're underwater.
You brought up a really important point. The easier it is to spend money, the more money you will spend, or currency for that matter. So, anybody that may be an old film lover, I think there's a movie, I'm thinking the name is something like, it has Mama in it and Barbara Bel Geddes was in it. And, it was a good movie, but basically her husband would bring home the money that he would earn, and she would sit down at the kitchen table and she would take some of it. Well, of course, it was gold and silver then, and she would take some of it and put it in this pile for this bill and that bill and that bill and that bill and that bill. So all of the bills that they had, and then what was left, she would have the ability to give each child. Oh, yeah, that's the one. I remember Mama. Thank you. I remember Mama. That's exactly the one. And I love watching old movies because they really show you where we were at that period of time. And yes, it does. Cash, gold, silver, all of that stuff, there are limitations. Now we have no limitations. And when they get to tokenize all of your equity and you're walking around with all of that on your phone, and hey, the IA nudges you to buy that boat or buy that blouse or buy that this or that or the other thing, the easier it is and the cheaper it is to create money, the more the money gets created, and the easier and more money gets spent. And so we then will, the World Economic Forum by 2030, you will own nothing. And you won't even realize, you'll blame yourself because you're the one that spent it all. It's like when I talk to people that had mom and pop shops and they went out of business. My sister's one, right? And they had a toy store for 40 years. And then Amazon came in and Wall Street said, you don't have to make a profit. We will just keep giving you money. So, they were getting paid and they were doing fine. And what did they do? And oh, by the way, you don't have to charge any sales taxes. So you don't have to make money. You don't have to charge people taxes. Therefore, you can sell things cheaper and force the mom and pops to work for Amazon or go out of business. And they blamed themselves because they didn't make good choices, but it wasn't a level playing field, and they didn't have all the information that they needed in order to make those good choices. This is not a level playing field. Redeemable money back in the system would level that playing field. That's what I want for the future of everybody. What do you want? So, DL Blue 65, can you please explain what happens if there is a silver squeeze? Okay, so there are all of these contracts out that create millions of ounces of silver that does not nor ever will exist. It's just not real. It is just a whole bunch of fiction. And as long as those contracts, those paper-only contracts go back and forth and are traded, well, it's not a problem. But when delivery of the physical is required, there is not enough silver to deliver on those contracts. That is the squeeze. And we're inside of that right now. This is not a brand new trend. This is a trend that really started last January because in the US, that's typically contracts. And there's an unlimited amount of contracts that they can create. I can't sit here and with any level of absolute knowing tell you how many ounces of silver that does not nor ever will exist have been created, because they hide so much of that leverage. But what I can tell you is that what started in January and is continuing at this moment is a silver squeeze, in that they are demanding the physical delivery, and then I'll have it. There's not enough silver there to do it. And so that's the squeeze. And if I say something and explain it and you still don't understand it, that's my problem, not yours. Let me know, and I'll try and explain it a different way or show you in a different way. But that's what it is. And silver gets used up in production. And that squeeze, actually, you might recall that, I can't remember if it was, I think it was February of it was either 2020, 2021, or 2022. I'd have to go back and look. But SLV, the silver ETF, could not go out into the public and buy enough physical silver to create the baskets. So they changed their prospectus so that all they have to do is mimic the spot silver market move. Yeah. So that goes into the silver squeeze. So this is not something that's brand new. It's something that's been building and is now built to a level that what is ultimately going to happen is demand and supply matter again. Just like affordability, that matters again. What a concept. You should be able to afford your food, your house, the things that you need to lead a reasonable standard of living. And they've devalued the currency so much that the vast majority of people can't afford things, the basic things that they need. So the same thing is true with supply and demand. This is a trading market. It is not a market based upon true supply and demand, but we're heading in that direction. It's marching toward that. And what that ultimately means is that the physical demand of gold and silver will be leading the prices. We are not there yet, but we are on the way. It is unfolding as you and I are speaking. It's one of the reasons why you're seeing a spike in silver, spot silver, I should say. So DL Blue 65 asks, it's getting freaky. I'm holding fiat dollars for a house down payment in next 6 months. It's hard to know where to put the fiat while I wait. Treasuries, high interest savings, a third in silver. It is getting freaky. I'm going to agree with you because we are that much further along. I mean, you can do a little. I would not do high interest savings, and I'll tell you why I wouldn't do high interest savings. Because if anything is paying higher than the market, then there's more risk in there than you realize. That you would probably find in something like a money market, right? And the money markets are the plumbing of the global economy. So, and I just showed you how they're about to freeze up, unless the Federal Reserve is proactive and then just prints a whole bunch of money and gives it to the hedge funds and the corporations so that the plumbing doesn't freeze up like it did in 2019. And you might not have even realized that it froze in 2019 because they had to inject Well, I say so much cash, but you saw that itty bitty blip. And then after that, the lines are much bigger. So, I mean, understand, it is freaky. And I can't really tell you what to do. Silver's going to have some level of pullback because it's just risen too fast. It's still not undervalued, but 6 months is a pretty short term. I think call us, and if you're already working with a strategy specialist, talk it through. Talk it all the way through. Would I do 100% for the down? No, I wouldn't. But it could make some sense to do some small portion of it that way, and maybe a little bit in treasuries, maybe keep a little bit in cash. I wouldn't do high interest savings. That's too much risk, especially with what's happening in the money markets. But to do a little bit of gold and some of the treasuries for the next 6 months, I mean, keep in mind as well that part of the strategy, if you're taking on a mortgage to buy that house, because you indicated this is a down payment, you also want to make sure that you have enough gold put back so that when they do that over that first one, we're going to do it on the first one, or we're going to try and do it on the first one, right? When we do that first overnight revaluation, you pay that mortgage off with dollars that have zero value, just like the government. And John Bethia, 4505. Lynette, what are super rich doing with their cash? And look at what central banks are doing. They know that destruction is happening. They know it. They know more than you and I do. They want to keep us stupid. But those up at the top, they are very well aware, and they're buying gold. It is that simple. They're buying gold. And probably silver now, too, which is what's pushing it up. And Tom Baranowski, 6413, where to go other than treasuries? For what? Okay, personally, I don't own any treasuries. I can see a reason if you've got to hold on to some cash for 6 months. It could make some level of sense to put a chunk of that cash that you intend to use in 6 months into treasuries, but where else? Nowhere else. Everything else is really volatile and severely overvalued. And the difference between being overvalued and overbought, right? Stocks and bonds and all those things are overvalued. And you know that because they want to lower the interest rates, and those are all made up of this stuff, and you can only convert it into this stuff. So the real trend is not them going up in terms of dollars, it's the value, the purchasing power, the value of the dollar going down, or euro or yen, wherever you are in the world. Whereas technically these are overbought. Just means they went too far too fast, but they are significantly undervalued. Personally, I like to have the lion's share of my wealth in an undervalued asset that is in a long-term positive trend. And you know that it's a positive trend because you can look on the chart and clearly see higher and higher lows. On negative chart, look at it, you can see lower and lower highs. So that's how you know, regardless of what anybody says, if something is positive or negative, right? And with even the manipulated spot markets, look at that long-term chart. What do you see? You see lots of lower and lower highs. Because if you keep getting higher lows, I guarantee you, can't give you a lot of guarantees, but I can give you this one. If you keep getting higher lows, you will get higher highs. Conversely, if you keep getting lower highs, you will get lower lows. I hope that wasn't too confusing, but that's the way that it works. So where to go other than treasuries? Sound money. It's a good place to go. And Christona 2012 asks, I'm relocating from Ireland and wonder, have you looked at what countries will be more stable and safe in the years to come? I'm a farmer, food producer, so been very involved in community Skillshare. I love that so much. And that started with my journey to the nomad capitalist, which is actually what they do. And they're not talking about developed nations like the US or Europe or any of those kinds of advanced economies, because they have too many rules and regulations, and they're just getting heavier and heavier and heavier handed. So they look to the stability of emerging markets like Malaysia and Cambodia, and we just got back from Panama would be one. And so what I would encourage you to do actually is go on the Nomad Capitalist website, because they know a lot more about this than I do. I've just begun my journey, but that's been their journey for a long time, and they would be able to help you with that. So I'm really glad to hear that you are a farmer, food producer, and been very involved in community Skillshare, because you know how important that is. And Anita Dotson, 5612, hi Lynette, have been watching for years, thank you so much, and have your mantra almost complete, yay. I watch another channel and he talks about borrowing against your gold and not selling. Can you explain this? Well, that's not really our policy. So I can't explain why he thinks that would be a good idea. Having said that, because you can't fix a too much debt problem with even more debt, nor would I want to jeopardize my personal gold holdings by borrowing against it. So no, I can't explain it. I know that there are programs that, and I'm not in operations, understand that. That would be the president of the company, Jacqueline Emerald. So when Emerald comes on and does something, these are really good questions for her, because she's the vice president of operations, right? And so she would have a better handle on timing and what have you. And I know that we are working on some other things to help people accumulate better. But I can't, I just don't think it's a great idea to take on debt to buy gold and silver. I wouldn't think that it's a good idea to put debt on top of your sound money that is savings-based. I think it puts it in jeopardy. I mean, maybe if it was like a small percentage, so that if the worst thing happened, you would have to sell only a small percentage of your holdings. But I think you'd have to ask that other person that question, because that's not really something that I would do personally. It's not something I would do personally, so it's hard for me to answer that. And Susa 2458 asks, I thought you were talking about glint comparison today. And you're right, Susa. I did say that I would do that, and then I got all caught up, crappy dappy. And then I got all caught up in that project, and it completely went So please forgive me. Please forgive me. I promise no matter what happens, I will do that first. I will do the list of what I had first. I had 2 huge projects this weekend, and so that's where my focus was. I hope you can forgive me. I'm sorry. I didn't do it. I'm sorry. I don't like when I don't do that. But I will do that first because I don't, other than working on this, I have to get back to my normal production schedule, in which case I usually now have gotten into the habit of doing whatever I had on my list here, doing that first before I dive in, and I did not do that this time. Please forgive me, I feel bad. Linking Atlas, I'm impressed to see that you had already predicted about China's economy. I worked for a multinational corporation that was acquired by Alibaba. Extremely political and only dirty game happening. Well, I appreciate that because I have found in my lifetime that I usually do things and say things and create things that are a bit ahead of the curve. So then that's why I'm used to taking so much garbage for it, because they don't believe it. But sometimes I just know things, and it's not really me, it's whoever's guiding me that gives me this information. So thank you so much. I will continue to try. I've done it all my life, and I will continue to do whatever it is and say whatever it is that they put in my mind and heart to look at and say. And Linking Atlas also asks, what's the future of the UAE, especially the Dubai economy, real estate? Dubai is like a really interesting place, and it's an anomaly because it was basically built out of nothing, kind of like Venice was built, and they created this city, and they're working hard on making it a financial hub. Now, some of you might recall that in 2008, with the global financial crisis, there were people that were leaving their Rolls Royces at the airport and leaving. Do I think that that's going to happen again? Probably not, because I think that was a big wake-up call for those that are in power there. So I think that they have diversified more, but the reality is the globe has to go into a new system. And therefore, every single fiat currency that is out there must be hyperinflated away. I'm sorry, it just has to happen. So I think that also creates opportunity. I know that that's what creates the opportunities. And so I would imagine there'll be some phenomenal opportunities in Dubai in the future if you hold your purchasing power. Just like there will be global opportunities everywhere, because what right now is severely overvalued, being propped up by all of this money printing, that all of that money printing inflation will go away. And then if you're holding your purchasing power, you can convert into it. So I don't think that Dubai is going to be any different than the rest of the world as we head into a hyperinflationary depression. Keep in mind that it is not 100% of the population that goes into abject poverty. It is globally on average 80%, and we've seen it worse than that in like Venezuela and Zimbabwe, where it's 90%. So you want to be part of the 10% or 20% that does not go into abject poverty? This is why, right here. And it'll put you in a position to take advantage of those opportunities that present, whether that's in Dubai or the US or anywhere in the world. We are global citizens. That's why it's so important to get sound money in the global system again, not just one place. So, and real estate, it's overvalued, right? It's overvalued because it's targeted for reflation. Gold is undervalued because it's targeted to be suppressed. That's going to flip-flop. That's what I think, not just in Dubai, but everywhere. We will see this. And Justin 12537, you have literally saved my family's future. Oh, thank you for that. No one would listen to me until they saw your Sound Money videos. Oh, thank you, thank you. And yes, I do know. You just gave me chills. God does love me, but he loves all of us. We just have to be proactive and do his work. And I mean, there's a reason why we have this gut instinct. Don't override it, because that's God guiding you. This FOMO, that's the market manipulating you. So thank you very much for that. Thank you very much. And just use your magic wand. Oh, I should have a magic wand. Ooh, I should have a magic wand. Okay, I like that. Remember when Burl Ives sang Silver and Gold in Rudolph the Red-Nosed Reindeer? Oh, yes, I do. Actually, I know that really well, even for current times. So you'll probably be seeing some of that on our social media. The snowman warned us as children what was real in a cartoon. Yep. Absolutely, absolutely. And I have Yukon Cornelius in my backyard because one of my all-time favorites, which I grew up with in the 60s, was the Island of Misfit Toys. So it is Burl Ives, but it is also Yukon Cornelius, that prospector that goes out to look for silver and gold. And silver and gold has been and continues in our vernacular. And you know, when you're sitting at night and maybe you're thinking, I want to play some solitaire or whatever, or you're doing video games, all of those coins, they're all gold. Have you noticed that? Cryptocurrencies, they color them gold. There's a reason. Even though we've been trained away from thinking of silver and gold as money, it's still in our subconscious. And it's starting to wake up now. That's what's exciting to me. That's why you're seeing the spot markets move. But how long ago did we start talking about the fact that Walmart, Costco, Amazon were selling gold and silver? These places don't give a crap about sound money, but they do care about what their public wants to buy. So, you know, we started talking about it a long time ago. Now we're starting to see it. These things happen slowly. It is a trend that is building. And honestly, I have so much hope for the future. I really, really do. One thing that gives me a lot of hope, and I'm really proud of at Zang Enterprises, is the diversity in age that we have there, because I think our youngest employee is something like 23 and our oldest is 78, and we have everything in between, and we learn from each other, we teach each other. And one of the things that I was just talking about this morning actually was figuring out how to say it in the different voices, because it's not us old people that are going to go out and create the revolution. It's the younger generation. And more younger people are starting to get really burned out, and they're actually realizing that, you know, the American dream here, it doesn't exist, where you do what you're supposed to do and then you'll be able to buy a house and educate your children and retire and go on vacation, do all of it. It's not real. It's a bill of goods, and they're starting to recognize that. So that, to me, is where the opportunity really lies, and I'm working on it. But you know, it's hard, but I will figure it out. But thank you for that. Yes, Burl Ives, love him, love that song. And Linking Atlas asks, if a person is relocating from one continent to another, then how can they transfer their gold and silver? Kind of depends on how much you have, right? Because some of it is a little bit challenging. I can tell you personally, wow, in the international travels that I've done, I probably shouldn't say this on air, but I always carry silver and gold with me. And it's not been a problem at all. Even when, nobody's asked me. Even coming back into the U.S., nobody asked me anything. I was really surprised because that's not usually what has happened. But you do not want to ship it. I'm going to tell you that because I've done that as well. And that gets very, very time sensitive. And that's just not a good way to do it. If you can carry it yourself, it is your private and personal collection. That is a good way to do it. Also, if you know where you're going, then that's part of the reason why we went to Panama. It's not to ship gold from the U.S. to Panama. We already know that's just not a good thing to do. But if you can get the gold where you're going and store it there, that makes a certain level of sense. So if you call us, we can help you with that to a degree as well. That's why we are a global company, and that's why we are, we don't have everything in place just yet, but we are working on it. And a lot of that was about going to Panama, a country that is potentially more amenable to expats if somebody wants to go there, and also storage. So, but if it depends on how much you have. If you can and you can carry it on your person, then that's the best way to do it. And Nunya 7984, are they overvalued or is the dollar just not worth poopy? So their price is going up. So the dollar is not worth poopy, right? Officially, you've got 3 cents, so you know that it's worse than that. The only thing that's holding it together, and it costs nothing to create it. And that's the point. A currency cannot have value if you can create quantity at will. It takes no effort, it takes no money. Stable coins, no effort, no money. Cryptocurrencies, electricity that gets used up, water that gets used up, not stored. Gold, silver, labor, energy, it takes to mine it, and then broadest base of buyer. It's not rocket science, it's just logic. So are they overvalued? It's a reflection of the dollar. You're absolutely right. It is a reflection of the value of the dollar and the inflation, the intended inflation to keep you inside of the system. Because how many times can you be lied to when you do not know the truth? So you're seeing this stuff go up. The stock markets, even with whatever itty bitty of correction that they've had, right? They're still like a whisper away from making even new highs. But that really is a reflection of the dollar being worth nothing. Very good point. Thank you for that. And 3 Diglets asks, why is silver going up? Well, it goes back to the transition that we're in right now from the paper contract market to the physical markets. And that silver squeeze that we talked about earlier, because people are demanding delivery now, right? Not in the future. That goes to the backwardation that we've talked about as well, where the current spot price, the price for delivery right this moment, is higher than delivery in the future because people do not believe they're going to be able to deliver it because they've made so many of these contracts that they cannot possibly do that. Actually, and I know this isn't accurate, so there's a level of hesitancy. Can you pull up that one on here? It's in this same thing where I compare the collectible market to the physical gold market to the derivative. But I'm telling you right now, in the derivative space, it is not accurate yet. So I hesitate to do it, but it'll make the point. No, not that one. Yeah, the 3 bars. Here, what? Yeah, if you tile them out, you should be able to see them. There, that one. That's the one I'm talking about. Okay, so take a look at this. And again, I'm telling you, I am not finished yet. So you're seeing some work in progress, but you are not seeing, I have a lot more digging to do because I know that the derivative gold is not accurate. However, having said that, that big yellow block that you see there is all the physical gold that exists in the world in any form. The gray bar in the middle is what they're saying is the derivative gold. And then that little red bar on the end is the collectible gold. So you can see how that gray bar, even though I'm telling you it is not even marginally accurate, let me finish my work on it and I'll show you. It'll be more accurate when I'm done with this. But you can see how the paper gold market dwarfs the physical gold market. And then you can also even see how the physical gold market, so bullion, dwarfs the collectibles, which is why in a gold rush, there ain't no fever like gold fever. In that rush, these outperform both. And that's just simply a fact. And I have the data to back that fact up. So, how close was this to the next one?
The one that we were just viewing?
Yeah, to the list, the one that shows the spot market.
You moved this further up on the
I
the
did.
change.
I did. I goofed it up.
Do you want the other one back?
The one that I said, no, not that one. So showing the difference between the spot market, the common date market, which a lot of people are getting fooled about. Yeah, that one. Yeah, I'm not really ready to show you this yet, but I'll show it to you anyway.
You've got
There you go. I've got my clicker. I don't think that I did this, but okay. So what you're looking at is that bottom line that just kind of looks red as I'm looking at it, but there's also a blue line there. The blue line is the spot gold market. And then, so this would be reflective of bullion. That red line that's just a little bit above it, it kind of looks like it's overlapping, but it's not really, is the common date collectible market. So it's this, but the most common dates, so like a 1904 or a 1924 St. Gaudens. That's the common date index. It trades with just a teeny weeny bit of premium in there, but definitely moves at this moment anyway with the spot market. That green line that you see there is the area where most of the work is done at Zang Enterprises. That is the collectible, the PCGS 3000. And of course, you see it spiking in 89. And I'm going to explain all of that to you as I do these snippets for you. And then that blue line is the more rare, not ultra rarities, but the more rare, like if you were doing some legacy building or whatever. And this goes back to 1970, and it takes us where we are today. And so what do you see, right? You see the performance of the spot market versus the rare coin market versus the more rare coin market. Which do you want to hold? You want to hold a combination because it depends on what you're trying to accomplish, right? But we have all of these scaled out, and you can see how those coins create a premium, and especially in the PCGS 3000 market, even though it hasn't quite hit its 2008 highs just yet, it's getting very close, and that'll give us a breakout. Do I think that it's going to go back to the 1889 highs? Yes, I do. I 100% do. And I have lots and lots of reasons for it, and I'll put together a whole presentation just on this alone. But it gives you a little snicker snack of what I'm working on because I'm an evidence-based decision maker, and people will poo-poo these things all day long, and that's only because they don't understand history. And I'm talking about some very smart people, even in the gold industry. They don't understand how these things operate, and I think you need to have all the information. Then you get to choose what feels right to you and what you want to do. But I don't want anybody to pull the wool over your eyes. How many times can you be lied to and you do not know the truth? So, why is silver going up? The silver squeeze, and because we're making the transition from the contracts dictating the visible price to the physical markets dictating the physical price. We're not done with that yet. We're still walking through the early phases of that, but I love that. That's very exciting to me. And Linking Atlas says, last day, Indian stock market crashed, and even today, they're selling stocks, buying metals, and also millionaires relocating to the UAE. You know, the UAE is not as regulated, so that could be a good place to go. But again, I would refer you back to the nomad capitalist that knows a whole lot more about that than I do. I got a huge education, but I'm still at the beginning of it. However, you know, it's funny. Yeah, I mean, there was an article that everybody was talking about today in the market news chat about the unit. Right? So the BRICS nation gold-backed unit. And I got to ask you this. And this is part of, if you're thinking about wherever it is you're going to go, you need to look at how does that political climate treat their population. Now let's look at the BRICS. China, Russia, India, Brazil, right? These, and I mean, there's more, but these key countries, do they have a particular history of making sure that their population is supported? No, they don't. They have a history of controlling their population. Do you really think that those countries would magically suddenly turn around and make sure that they had a truly redeemable gold-backed system? No. And they can't do it until they finish off the debt, until after the hyperinflation. And that's our opportunity to get redeemable gold back in the global system again. They won't do it voluntarily. Now, I'm not saying they won't say that the currency is backed by gold, but if you can't redeem it, then all it is pegged to a lie, pegged to that false spot market. It ain't true. So, you know, yeah, they are relocating to the UAE. UAE is putting a lot of money into infrastructure. There are a number of countries, not advanced countries, but emerging markets that are putting a lot more money into the infrastructure, and therefore could be a better place to be than in our developed advanced economies that have not. They talk a lot about putting money into infrastructure, but they don't do it. So honestly, it could be a great place. It might not be. What are they doing for their citizens? Because if they aren't really doing things to support their citizens' well-being, they're not magically going to change unless they're forced to. That's what redeemable gold in the system does. It forces them to do what is in the public's best interest first. Because if you don't like what they're doing, you're pulling the gold out of the system and forcing them to have fiscal responsibility. So, India's stock market is, because what do? They print money. They all do this. They just print money. China does the same. They all do the same thing, right? Their currencies are disposable. And every time they print that money, it makes things look like they're going up, but they can't sustain it because there's no solid foundation of demand. There isn't. Stocks, bonds, currencies, one place, including cryptos, one place. Gold and silver, every place. Supply and demand is mattering again. Thank you for that, Linking Atlas. And SSN Bryson asks, what percentage of savings to be in gold and silver? It depends. There's no blanket answer for that, but I would say that whatever you don't want to risk should be in physical gold and physical silver. And you can call us and we will, you put your goals first. That is the very first thing that you need to be talking about. What am I trying to accomplish? Sometimes people don't really know that. So we'll help guide you by asking you questions and help you define what it is you are trying to accomplish. Once you know that, we need to know what your circumstances are. It goes back to, are you 45 years old or are you 75 years old? Going to be two different circumstances there, right? And then we also then have to look at what do you have to work with, because you might have $5,000 to work with, you might have $5 million to work with. $5,000, you're not going to be able to execute the full strategy, but you can get started and you can go to your pain points. And in that first, where the cash it kind of depends, a percentage of savings. So if you're looking at savings, then to me, what I'm hearing is you want to sustain your standard of living. This is quite honestly, other than the bits of cash that I hold for my first line of defense, this is my personal savings account. Just a raw $20 libs and saints. That's my savings, because I have a lot of people that I pay salaries to, and I want to make sure that no matter what happens, I can pay their salaries. And I feel more comfortable with this than I do a whole bunch of cash in the bank. So this is my personal savings. That may or may not work for you. It works for me because I understand it so deeply. So what percentage? Well, what percentage are you prepared to go to zero? That's the amount that you keep in dollars. That's what I have in dollars. If all of the dollars that I hold go to zero, I really don't care. The function of these for me is my very, very, very first line of defense. But I intend to, simply because they're more recognized. But then the next part goes into barterable. So you see, these are just raw, different sizes. Okay, so we define what you're trying to accomplish, and then that tells us how much gold do I need and how much silver do I need to sustain your standard of living. Whatever assets you've accumulated, whatever fiat money assets you've managed to accumulate, we need to protect those that you're not going to liquidate. So that's the next part of the amount of gold that you need. We're going to look at all of your fixed rate debt that we're going to pay off with dollars that have no value. That's how much gold you need for that function. And then it's about, what do you want to do for the other side? What are those income producing assets that you're going to be acquiring? That's a certain amount of gold. And then beyond that, do you have children? Is leaving a legacy important to you? Then you have that kind of gold. So there's no blanket answer that I can give you because it varies from person to person. But I can tell you this, it should all be done to your level of comfort. No matter what anybody says, including me, you need to do it to your level of comfort because you are the one that's going to reap the rewards or suffer the consequences of any of the choices that you make. And do you think they will, GY2702, do you think they will try tokenization of gold and silver? I know they are trying tokenization of gold and silver, because for the banks, right? I mean, they use your collateral to borrow against or your equity as their collateral to borrow against. And they're levered. And so they have this itty bitty bit of equity and tons of debt on top of that. They need to expand that access, and physical gold and collectible gold and silver is outside of their purview, right? So if they tokenize it and they turn these into tokens, now the bank has a whole bunch more equity, your equity, to build more debt and take more risk with. Because at the end of the day, when things collapse, it's the general public that pays. So yeah, they already have that in the world. In fact, I did a video. Maybe we can put that tokenization link in there. Because oh yeah, they want to. They want to have they want to have this glass tokenized. So not only am I renting this glass because I've spent it on the equity in this glass on my phone, but haven't they been getting us used to monthly subscriptions? You subscribe to everything. You think that all of those, everything that you've got on your car, all those bells and whistles won't at some point come with a subscription? If you want this, yeah, you can have it. And it'll cost you X amount of dollars. Everything. By 2030, if they have their druthers, you will own nothing. You're not going to be happy, but you will own nothing. If I have my druthers, we will have redeemable gold in the system. The playing field will be leveled and opportunities will abound because we will have sound money back in the system again. Got to do it for our kids. And Robert Selig asks, Christmas presents for the kids will be silver rounds with an education on money and metals so they can cash it out or hold on for future gains for a real lesson on wealth. Absolutely. And stay tuned because we have some things in the works. These things still do take time, but we have a lot of educational pieces in the work. We do have a few workbooks and things that are kind of done already. So Robert, why don't you give us a call? And if you're working with a strategy specialist at Zang Enterprises, ask them if they might not have some workbook sheets that they are willing to send you. They're going to love me offering that. But they'll roll with it. It's a great gift. It's what I give as well. So that's perfect. And Scott Heller, 1379, asked, silver always has the highest premium barrier to entry. It's not a barrier to entry when it's, even with spot at $60, it's still not a barrier to entry, right? At $60, it's not. And there's all different ways that you can own silver because frankly, gold and silver in any form are monetary at their base. Ta-da! But yeah, I don't view that as a big, huge barrier to entry. But some people might, and I can't say that you're wrong, but I would say that you are, keep in mind that the fees that you know about, so the premiums, whatever, are a whole lot cheaper than the fees that you don't know about. So what, you're listening to this stuff and hey, if you do this, there's zero fees, zero commissions. We're going to give you 6% back. Do you really think they're doing it without making lots of money off of you? There ain't no such thing as a free lunch. So let me know what those fees are up front and I can decide for myself. Because I guarantee you, you're holding an ETF, you're holding a mutual fund, you're holding any of that, an annuity, any of that stuff. There are daily ongoing fees that you are being charged. The fact that you don't see it does not change the fact that you are being charged. And then, let's see. Thanosku outro mumbus. He's laughing at me. 356 says, Lynette, tell me something. Do you think that the system will allow a crack in the system before they push us all into the CBDCs? We see banks being bailed out, silver and gold prices being manipulated. So I'm not exactly sure what you mean by a crack in the system, because I'm seeing lots of cracks in the system constantly. I just showed you a huge crack in the system. So yes, I definitely do think, but what you need to understand is, in order to make the transition into the CBDCs, or I don't see a whole lot of difference, quite honestly, between the CBDCs or the stable coins. You want the Federal Reserve to dictate. Well, they're a corporation. Which corporation do you want to dictate to you? Take your pick. But yeah, the system is cracking now. The system died in 2008 and was just put on money printing life support so that you didn't realize it. But have you noticed the development of the cryptocurrencies? Because when did Bitcoin come out? January of 2009. Is that a coincidence? I don't think so. 1996 NSA white paper, How to Make a Mint. They know how to do this. They know how to make these transitions. They're brilliant at it. It's evil genius, but it's brilliant. All they have to do is keep things looking as much as normal as possible. Original money. Oh my God, so heavy to carry around, all these gold coins. Oh, cash, those pieces of paper, they're so much lighter, so much more convenient. And hey, it's the same thing. They both have a $20 face value, and you can walk into the bank with this and walk out with this. It's all the same. There's no difference. This is as good as gold. But at the same time, they brought out this. Now, I don't know, in your opinion, doesn't this look an awful lot like this? Doesn't have that little gold round there, but hey, it's got the same face value. If I turn it around, the back of it pretty much looks the same. The front of it pretty much looks the same. Same size, same color, same everything. So, what did they do? 20 years we worked with all three of these. The public could use any three of these at the same level of purchasing power. So, they thought this was just the same as this, which was just the same as this coin. When they took that away, this was still left. People thought nothing had changed. Everything changed. We gave up our power. We allowed this garbage to come in. It's not now that we've destroyed the Constitution. They started that in 1913 when they legalized the Federal Reserve. And we've been losing our rights ever since. And now we're at the end. There's no more purchasing power left to inflate away. They got to attack principle. And that's what the digital currencies will enable. Because this, you go 1.00, creates limitations. But in the digital currencies, they can continue the inflation, attack your principal, and make it at a small enough level that you don't notice it at all. And you didn't really understand that that's what was happening with this either, did you? You're going to understand it less when we are fully integrated into digital. Do you see why it's so important for us to come together and get redeemable gold back in the system again? It's the only way we will take our power back. If we don't do this, I can just say I'm glad I'm old, but I'm not happy about what will be left for our children. No. So, system's cracking. We will have a big crisis. They will try to shove it down our throats. And unless we do something now, I don't even like to say that they will succeed. I don't want them to succeed. That's the battle. And we have to, I look in the mirror, and I do this, actually. Some of you might think a little strange, but I look in the mirror, and when there's a hard choice to be made, and there are two things that I typically have done in my lifetime. Number one, I've looked in the mirror and said, if not me, who? And if not now, when? And so I challenge each and every one of you to look in the mirror and ask that question, because we have to do it. Whatever your circumstances are, we can come together and make this happen. And then the other thing that I would ask myself is, I've been a single mom since my daughters were 3. And hey, nobody lives a life unscathed. And so there were times when I had to deal with some very, very, very hard choices. And it would have been easier just to kind of go along to get along. But rather, I had to say to myself, if my daughters were faced with this, how would I want them to walk through it? So I took myself out of the equation and I put my daughters, whom I love more than anything, into that equation. And I'd ask that question. And then I'd answer it just based on how I would want them to walk through it. And then that's what I would do. It's much harder when you live your life in integrity. But it's much richer, and that's the legacy to pass on. And so we're at a hard place right now. And we have to ask ourselves, take us, after you know that it's got to be you and it's got to be now, then take yourself out of that equation and put your children into this equation. What do you want for them? And then that's what you do. So I think we have this last question. The American Dowser, hypothetically, if silver hit 1,000 to 5,000, would government confiscate silver? No, I don't think that they would confiscate silver just based upon the price, because they know darn well that they're the ones that are manipulating that price. And because it's used so much as an industrial metal, that it would be very, very challenging, and it gets used up in production, it would be very challenging to confiscate silver, which is why I'm okay with bullion silver, because I don't have the same kind of concerns around silver that I do around gold. Gold is the primary currency metal. It is indestructible. It has been accepted as money, well, so is silver, for many thousands of years. But I'm just not as concerned about the confiscation, because it gets used up in manufacturing. And even though gold also is used in every sector of the global economy, silver's more heavily used. I don't know how they would manage to confiscate it from the businesses, from all the different ways that it's used. And keep in mind, much as they've tried to duplicate the properties inside of a lab, well, they've been able to duplicate diamonds, but they have not been able to duplicate all the qualities that gold and silver possess. So it wouldn't be the money, because they know that it's already worth, in terms of dollars, like I think 1,200 to 2,000, something like that, the last time I checked. So they suppress it. It'd be more the visibility of it, but no, I'm not as concerned about that for all of those reasons. So that's it. Well, wait, there's one more, and I think I want to read that. Okay, Bob Basker, 2537. I have been in finance my entire career, 72 years old now, 71. I have never had finance explained at a grade school level. Oh, thank you for all you are doing to help us make solid financial decisions. Well, I'm really honored, and I'm glad that I took that last question, because It should be. It should be explained in a way that we get it so that we can make those educated choices, but they don't want us to be educated. And I know what you're talking about, Bob, because I worked as a banker first and then as a stockbroker. And, you know, you'd think I went to Shearson because they had the best training program on the street. And this was in the 80s. And I was in banking before that. And, you know, so I went there. What did they teach me? They did not teach me how to read the technical language of the markets. They did not really even teach me about, you know, they'd have wholesalers that would come in and they would tell you all of this, but they didn't really teach me about money, how it was created and supported and all of this, because they didn't want us to know it. And so if you're talking, I just had this conversation yesterday with one of our clients, and I said, if you're talking to your broker who would not do the analysis for this person, I don't know why they got paid when she bought all this stuff. You'd think that to service it and help her understand the choices that she'd make, he would have done this. I can't say that he has any ill intention, but I can say that he didn't bother to learn what he needed to know to help people make educated choices. So that's what I found in my career, is that the people that I worked with, they weren't bad people. They didn't have ill intentions. They were just kind of lazy. But that, I didn't think that's what people were paying me for. I thought they were paying me to understand this so I could explain it. Boy, once you start going down that rabbit hole, Bob, I'm sure you will agree, once you go down that rabbit hole, it changes your life forever. And then you can't do this kind of thing. You can't sell people down the river. That's why I had such a hard time on those Treasury questions, because I know they're bad. I know they're a big fat lie. I know that they're corporate debt. How can I tell you to go there when the system is cracking under the weight of all of this debt? And with that, I hope you guys have great holidays. I'm sorry. But you know what? If we're all protected and if we all come together in community, we can make a positive impact on a lot of people. You guys being here is such a gift for me. I couldn't even explain it. So if my little way, I'm helping you in any way at all, I just have to thank you for allowing me to do that, and for being here today, and for building this global community and fighting this fight with me. Don't forget, call and get your dime cards. And you'll see the video, use the video. And you know, if they find the holes in it, let me know. We'll plug those holes. This is an ongoing thing. It is not a one and done. And until next we meet, please be safe out there. Bye-bye.